More now on the European debt crisis. Our next guest says that the Irish bailout may be the start of problems for the euro and what she calls a two-speed Europe. Vicky Pryce is Senior Managing Director at FTI Consulting. She was the first female chief economist at the UK's Department of Trade and Industry. She joins us this afternoon, local time, from London.
Good afternoon.
Vicky, welcome to the show there. Before we get to contagion, let's talk about austerity. This four-year budget plan unveiled in Dublin today. A hike in taxes, cutting close to 15 billion euros, $20 billion or more. Does this do what it's intended to do?
Well, what we've just heard is, of course, the quite substantial fiscal consolidation which Ireland needs to do in order to continue to be able to borrow. The problem with all that, of course, is that if anything, growth in the economy is going to be slower than would otherwise have been the case, and that will, in the short and medium term, accentuate some of the debt problems that they have at present.
Right. Well, I suppose the answer to that is, well, the borrowing costs may go up, but we're going to get the fund to give us the cash in the near term. So does this buy time for Ireland to, in effect, ignore the bond market?
Well, we've already seen what's been going on in the bond markets. The reality, of course, is that lending had simply stopped being available for Ireland, so they had to do something about this, with the result that it had to be the package that has just been announced in terms of the lending to the country by the European Commission, by the IMF, and also additionally by some individual governments, because without that they would not have been able to raise any money at all. So in a way it's immaterial what's going on in the bond markets, since they weren't able to raise any money whatsoever until now.
But is there a material change, given that, I mean, this four-year plan looks a lot like what I had seen telegraphed in a lot of, articles written up to this date? Were there any surprises in here for you?
Well, the surprise really is in terms of what they've announced today, that they are prepared to, in a way, if you like, antagonize their own people by cutting even further in terms of wages. I mean, they're reducing minimum wage, in terms of raising taxes, which of course are going to be painful. And the real question is whether A, it's going to be passed, and B, what's going to happen when the elections take place. So whether, in fact, the whole package is going to stick is going to be a big issue for them.
No, it certainly will be. Reported up to this point is that there is support for the package. We'll try to get an answer from Minister Lenihan later on. But give me this argument that you have, this viewpoint on this two-speed Europe. Is contagion at this point just to be assumed? Is there any way to cut it off?
Well, it's a real problem. And what we've actually seen is that a number of the sort of bigger countries, such as Germany and France, are actually doing rather well, the Benelux countries, in terms of growth. And what they've done is they've improved considerably their competitiveness over the last 10 years, whereas all the periphery countries have not managed to do that. They've lost in terms of labour costs going up, and their ability to really sell and export right now is really in danger. With the result, therefore, is that we may be ending up with the northern European countries actually being able to borrow more cheaply and move ahead, and with the periphery countries needing to always be sustained.
Vicky, I'm apologizing for cutting you off here. The computer's about to take over and take me to break.